Every single day, millions of people log into their brokerage accounts, look at a flashing green and red screen, and call themselves traders or investors. They truly believe they are analyzing macroeconomic trends, studying corporate fundamentals, or decoding complex technical charts. But do you want to know the brutal truth? 99% of the people in the market are not trading at all. They are gambling. There's a razor-thin line between a professional institutional trading desk and a roulette table in Las Vegas, and 99% of retail participants are standing on the wrong side of that line. In this video, we're not going to talk about fancy lagging indicators or secret algorithms. Instead, we're going to pull back the curtain on that elite 1%, the professionals who systematically extract wealth from the other 99% every single day. If you want to turn trading into a legitimate career, a primary source of income, or a real vehicle for generational wealth, the next 15 minutes will be the most critical financial reality check you will ever experience. To fix the problem, we first have to understand the illusion that 99% of gamblers fall into. Why do so many smart, educated people mistake pure gambling for professional trading? It all comes down to human psychology and the biology of a dopamine rush. The human brain is hardwired to love uncertainty when it is paired with a reward. When an amateur trader puts $10,000 into a volatile tech stock or a short-dated options contract, and that contract shoots up to $12,000 in 2 minutes, a massive wave of dopamine hits their brain. They do not think they got lucky. They tell themselves, "I am a financial genius." In professional finance, this dangerous mindset is called resulting. Resulting is the cognitive bias where you judge the quality of a decision based solely on its outcome. If you made money, you assume it was a great trade, but in reality, it was just blind luck. Let us look at how a typical retail gambler operates on a daily basis. First, they suffer from FOMO, the fear of missing out. They see a stock skyrocketing on social media, they see the momentum, and they blindly buy at the absolute top because they can't bear the thought of missing the ride. Second, they engage in hope trading. When a position moves against them and they start losing money, instead of cutting the loss, they freeze, they pray. They tell themselves it has to bounce back eventually. I'll just hold on a little longer. Third, they fall into the trap of revenge trading. They lose $2,000 in the morning session, they get angry, and they immediately double their position size in the afternoon to try and win it all back. This combination of FOMO, hope, and revenge is not a financial strategy. It's pure, unadulterated gambling. Statistically, study after study shows that over 90% of day traders lose money over the course of a year. They fail because they are not participating in the markets. They are buying a lottery ticket wrapped in a candlestick chart. So what makes the 1% different? Do they possess a secret software terminal? Do they have insider information? Absolutely not. What they possess is a definitive statistical edge and a strict, repeatable process. In the world of professional finance, trading is treated exactly like an insurance business, not a game of chance. A professional trader never enters a position based on a gut feeling or because they think a stock feels cheap. They operate strictly on numbers, probabilities, and risk architecture. They rely on 3 core pillars that 99% of amateurs completely ignore. The first pillar is the risk-to-reward ratio. This is pure mathematics. Imagine a structural setup where if the trade fails, you lose $500. But if the trade hits its target, you make $1,500. This is a 1-to-3 risk-to-reward ratio. If a professional trader operates with these parameters, they only need to be mathematically correct 40% of the time to be highly profitable. Even if they lose 6 out of 10 trades, the 4 winning trades completely wipe out the losses and generate a net profit. Amateurs do the exact opposite. They risk $3,000 just to make a quick $500. The second pillar is position sizing. A gambler looks at their account balance and risks 20, 30, or even 50% of their entire capital on a single high-conviction play. When that play fails, their account is permanently crippled. A professional trader never risks more than 1 to 2% of their total liquid capital on any single trade. If their stop loss gets triggered, it's completely irrelevant to their business operation. They don't care because they still have 98% of their capital perfectly intact to fight another day. The third pillar is execution without emotion. For the elite 1%, the entire trade is mathematically decided before they ever click the buy button. They know their exact entry price, their exact profit target, and their exact invalidation point, which is the stop loss. When the market hits that stop loss, the professional exits immediately, without hesitation, without regret, and without emotion. It's a cost of doing business, nothing more. If you recognize yourself in that 99% gambling category, don't panic. Admitting it is the first step towards actual profitability. The real question is, how do you make the transition into the 1% professional zone? It requires a complete rewiring of your operational habits through 3 distinct steps. Step number 1, you must treat trading like a high-overhead business, not a casual hobby. If you were opening a franchise or launching a tech startup, you would never deploy capital without a business plan, a proof of concept, a strict budget, and a risk management policy. Yet, people open a brokerage account and start throwing thousands of dollars at the screen with zero planning. You must establish a rigid daily loss limit. If your maximum daily loss limit is $1,000, the moment you hit that number, you close the laptop, walk away, and accept that the business is closed for the day. If you don't have the self-control to do that, you are a gambler. Step number 2, stop chasing the holy grail. Amateurs spend years searching for a magic indicator, a perfect chart pattern, or a secret guru who is 100% right all the time. Let me save you years of frustration. That doesn't exist. Every indicator, whether it's RSI, MACD, or moving averages, is just a derivative of price and volume. The magic lives in your risk management and your execution discipline. A mediocre strategy backed by world-class risk management will make millions. A perfect strategy backed by poor risk management will go bankrupt every single time. Step number 3, you must maintain an institutional-grade trading journal. The single biggest difference between an amateur and a professional is comprehensive data tracking. Every single trade you take must be documented. You need to record the asset, the setup, the exact risk-to-reward parameters, the ultimate outcome, and most importantly, your psychological state during the trade. Were you anxious? Were you confident? At the end of every week, you must audit your data. If you don't keep an accurate log of your mistakes, the market will continuously punish you by making you pay for the exact same mistake over and over again. The financial markets are beautiful, but they're completely unforgiving. The market is a giant sorting machine designed to transfer capital from the undisciplined, impatient gamblers to the disciplined, patient professionals. 99% of people will continue to gamble because gambling is exciting, fast-paced, and requires absolutely no mental heavy lifting. The 1% will continue to trade because professional trading is structured, repetitive, and intentionally boring. It's a business, and businesses exist to generate predictable net margins. The choice is entirely yours. Do you want to remain part of the chaotic 99% crowd that constantly blows up accounts, blames the market makers, and treats Wall Street like a casino? Or are you ready to join the elite 1%, who operate with extreme clarity, manage risk like a hedge fund, and build long-term wealth? If you're ready to commit to the discipline of the 1%, type "I am the 1% in the comments below so I know who's actually serious about this journey. If you found value in this breakdown, hit the like button, subscribe to the channel, and share this with someone who needs to stop treating their portfolio like a lottery ticket. Thank you for watching, and as always, trade smart, manage your risk, and protect your capital.